First speakers already ready and waiting to start his talk about the future of finance transforming banks. Please welcome with me Deputy CEO of Bitpanda, Lukas Enzersdorfer-Konrad. Lukas, it's nice to have you.
Thank you. Great to be here. So, hello everyone from my side. Great morning. I think after a deep dive in crypto, but not just crypto, but especially DLT custody and how from an institutional point of view to actually handle that, and not just the challenges, but also the recent wins of the last year. I have the pleasure today to give you an insight about who actually are the people who are invested into crypto as of today, who are and who's the community who is already like not just engaging with that asset class, but also how that actually is impacting banks, financial institutions, and anyone involved into the whole financial industry. So therefore, let's start with a quick wrap up from my perspective. Super curious about how many of you actually own Bitcoin, Ethereum, or any other cryptocurrency as of today. Hands up. Okay, so around about 50%, 60% of this room. I believe probably it's even higher, but let's look on the whole society, right? If we look from a European perspective on how many people are owning or have at least in the past owned any crypto asset, it's 23% on average across Europe. That's an immense high number if you think from a retail society perspective, and I think we heard it already from Jan van Eck as of today. It's still very much retail driven when it comes to crypto assets and investing into crypto assets. But it also means if we look on Germany, if we look on other European countries, where in regards of traditional stocks engagement and trading, how many people own stocks, that's on average lower than 23%. So what you see is that a lot of retail users, retail investors are invested in a high risk, high yield asset class, but not to that degree into stocks, ETFs and other like lower risk assets, which is actually from a rational perspective not understandable, but actually shows that this is super interesting to them. Second topic I think which is relevant for that is who are these people, and if we look on the demographics, Jan van Eck said that Charles Schwab had this survey last year about the US. The age distribution in Europe is slightly different. It's not the majority below 35, it's actually one third, one third, one third. It's one third of people under the age of 30 who are invested into crypto. It's one third of people who are between 30 and 45 invested into crypto assets. And it's one third distributional wise from 45 onwards years old actually. But why is that way, and why do we have an immense large amount of investors actually who are not just young technological enthusiasts, but who are people who are really interested actually in investing into that and getting exposure to that asset class? It's also about wealth distribution. In Europe, from a society perspective, wealth normally comes later with your age. You start working and then you accumulate actually a certain amount of wealth. And this also is actually reflected into the crypto markets when we see about who's investing into crypto assets and when. If you look on the distribution of how much each of them invests, it's even more heavy on the 40 years older topic actually. But why is this way? Why are they actually investing in a high-risk, high-yield asset class more than even in stocks and other assets? It's about three main characteristics which crypto assets and blockchain tokens actually have. It's about you can have a fraction, you can buy a fraction of it, meaning you can buy already starting with €1 and investing into crypto assets, into Bitcoin. The second topic is the 24/7 tradability, meaning you can simply trade it 24/7, right? 365 days a year, and even on New Year's Eve, if you're up for that, you can buy some Bitcoin. This is not possible in the traditional markets. And if we look, for example, on trade activity, how much trade volume is occurring in the crypto space on the weekends when normal stocks exchanges are closed, it's 20% roundabout. So 1/5 of the whole market activity is happening at times when normal banks are closed. Or normal markets are closed in that regards. And the third one is transferability. You can very easily send a crypto token, a Bitcoin, to someone else, which you simply cannot do with a stock. I simply cannot send you my Tesla stock, right? So that's something which is very, very relevant for everyone, not just in this room, I guess, but especially out there when it comes to why invest into a high-risk yield asset class in that regards. So, the FTX transformation. We all have seen a lot of different crises, not just macroeconomic crisis since early last year, but also especially in the crypto space. Crises which started with Terra Luna actually last year in April, and more or less since then every 2 months, another one and another one, which peaked into the crisis of the FTX meltdown, so to say, the fraud of roughly $9 billion US dollars on the Bahamas, where user deposits were simply frauded and are gone more or less. And that started a mindset shift. If you look on retail investors in Europe and also investors into crypto, before it was a lot about who has the largest asset offering, who actually has the newest feature, who offers some liquid staking functionality, who offers some other way of new feature product, which is interesting for them, and that's the reason why they go to that platform. This has changed. Since November, we see that regulation, trust, security suddenly is much more important for everyone, because you have your money there, and you want that this is secure, you want that this is safe and not suddenly gone because some unregulated exchange or broker from somewhere actually went away with that and frauded you. And this also comes down to your normal bank account, right? No one of us actually would have his salary paid out on a monthly basis to some Thailand bank and spending from there. It's simply exactly about that. And therefore, regulation is very important. Regulation is very important, and we see that also from a European perspective. So is that working? Yes. From a European perspective, that more and more regulators, not just BaFin in Germany, but across whole Europe, including the upcoming MiCA regulation, are actually forcing and also actually driving regulatory adoption for that, which is very important because otherwise you cannot build the trust and the security. And the whole topic of trust and security is also interesting because it's the core values of traditional banks in the retail space, but also when it comes to private banking, wealth management, or corporate business. So crypto is going down the route of regulatory needs, the route of needing to be regulated and to, in the end, safe, to exactly build the trust across society, to establish itself really as an asset class, which is interesting. That's an evolution. That's an evolution of finance. And this evolution has 2 main streams. One stream, we talked about earlier today, is about blockchain adoption, about applying technology, DLT, to all different kinds of use cases, process efficiencies, and making it simply easier, faster, and less costly to have the same products, which we already have now in the financial service industry, and offer that to the customers. And the other track is crypto as an asset class. Crypto is a high-risk, high-yield asset class, which is interesting for all different kinds of market participants to invest in, not just a token, but the underlying technology and the underlying projects in that regards. And that's the evolution we are in the middle of. We are since 10 years now here, having on this planet blockchain technology, but this actually is going in the next 10 years to even get much more from a mass market adoption. Because there's one thing, it's revenue driving. It's a new asset class, so we said blockchain as technology will be cost efficiency, will reduce costs, will reduce intermediaries. Crypto is a revenue driver. It's an additional asset class. It's an additional way of giving people, giving companies a way to get exposure to this high-risk, high-yield asset class and to actually also in that regards drive revenue for them. And that's the really interesting aspect. But how does that look? How actually can you get exposure to that asset class? Or how can you actually take care of that? And this leads back to the topic of investment as a service infrastructure. Everyone, not just in every bank, but everyone who is working in the financial service industry needs to ask her or himself actually, how can I, midterm to long term, take care about not just have the DLT capabilities in my company, but especially how can I take care about offering and servicing and supporting crypto asset use cases. Why? Because the demand is there. The users are there. We saw it in the beginning, 23% as of today, and will also get more and more over the course of the next couple of years. So it's a valid question. It's a valid question to think about actually how to do that. A valid question to think about how to offer that. And there are always, there's always the question about make or buy. Do I have the knowledge as of today to actually get a solution up and running? Can I actually deploy different technologies to support that use cases? Or is probably a way of best of breed, a lot of different market participants who are here as of today, but also out there, who already take care about the problems when it comes to compliance, regulatory, risk management, or also simply customer experience to actually get a smooth solution fast into the market and then actually learn with experience on the customer and on each of them. And that's an interesting thing when we look about how we actually enable as Bitpanda Technology Solutions players in the market, even regulated banks like an N26, to start their crypto offering. And I'm super eager to tell you a little bit more about how actually that process was and has been getting a regulated bank in Germany, N26, together with BaFin as a regulator on the one side, but also across Europe in all different markets to actually launch and start their crypto offering. And as you can imagine, the topic there is first, all these normal questions, especially from a regulatory perspective, come up with who's the legal counterpart? How does that from a risk perspective actually work? Or compliance-wise, banks should not have that much exposure actually to crypto assets and from a balance sheet perspective. So how actually solve that on the one side, and the other topic is technical integration. Technical integration so that an N26 does not need to integrate into all different kinds of components. How is your core banking system taking care of that? What to do if you even do not have a securities custody system? And that actually is the topic, and these questions you need to answer along the way when it comes to how can you start going into that space, start offering crypto assets as an asset class, and in the end also give your customers a great experience while taking care about all regulatory hurdles. And honestly, I can tell you, it was very interesting thing working with BaFin very closely across different departments, with a partner like N26 in Germany, but also with all different kinds of regulators like a French AMF or an Austrian Financial Market Authority to actually get a setup up and running, which is regulatory compliant, which is set up for success, and also which takes care about all the hurdles about, hey, I have already KYC'd my customer on the banking side, I do not need to KYC it again when I actually offer a crypto asset solution. And this is what we as Bitpanda, being in the space for 8 years now, being the most regulated crypto platform actually in Europe with 12 different licenses and registrations, are enabling partners. Our enabling partners, as you can see up here, like N26 in Germany, Lydia in France, but also soon traditional banks. And if you would ask me as of today, where does this go? Where will we stand in 1 year from now at the next crypto asset conference here in Frankfurt? I will tell you that we will see a couple of traditional banks across Europe, in France, in Spain, in Germany, offering already crypto assets, in their private banking use case and also offering it in their retail use case. And this will really be a game changer because it suddenly will give more than just 23% of society access to crypto. And this also will drive, we spoke about the halving already, which is upcoming next year. This will also drive the next way, from my perspective, when it comes to crypto adoption and also like crypto innovation to a certain degree. So therefore, I can just invite each of you to think about how to actually handle that in the future. What's your strategy when it comes to crypto assets? What's your strategy when it comes to building customer service offerings in that space? And think about that, how to solve that along the way. Why? Because there are a couple of banks already out there who are actually doing that. Thank you very much for having me today, and I hope it was an interesting insight when it comes to customer behavior. Thank you.